You have money in your account right now, and the bank is already making a plan for it, not for you, for themselves. Here is the truth. Nobody tells you when you open your first account. The bank does not treat everyone the same, not even close. There are 8 levels inside the banking system, and where you sit on that ladder determines everything: the interest rate you pay, the loans you get, the fees that quietly bleed your account dry. And the worst part? Most people spend their entire lives stuck at the bottom 2 levels, without ever knowing the other 6 exist. Stay with me, because by the end of this, you will understand exactly how the system works, and more importantly, how to start climbing. Let's start at the very bottom. Level 1. Imagine it is a Tuesday afternoon. You are at a gas station. You swipe your card. Declined. You swipe again. Declined. There is a line behind you. People are watching. You are doing mental math you cannot finish fast enough. Your account went negative. Maybe by $40, maybe by $4. The number almost does not matter, because within hours, the bank charges you $35. Not because you did something wrong, but because you didn't have enough. And here is the cruel part. If you had money, you wouldn't be overdrawn. But because you don't have money, you now have even less. Some banks charge that fee per transaction. 3 small purchases while your account is negative? That is $105 in fees. On top of the deficit you are already carrying. American banks collected over $7 billion in overdraft fees in a single recent year. Most of it came from the same small group of people, paying over and over again for the privilege of being broke in a system that charges you for it. You are not a customer at level 1. You are a cost the bank is trying to recover. And the system handling you, it does not know your name. It does not know your paycheck was delayed. It does not know the charge was a forgotten subscription. All it knows is that your balance is negative, and everything else follows from that one number. Level 2. You have pulled the account back. Maybe you have $200, maybe $400. On a good month, $600 before rent drops and everything resets. You are not overdrawn. You are something slightly better than overdrawn. And the bank? The bank is indifferent. Every month, $12 or $15 disappears automatically, a maintenance fee. Because your average daily balance did not hit the minimum. At most banks, that minimum is $1,500, sometimes $500. If you had $1,500 sitting still and untouched, the fee would vanish. But because you don't, it stays. You are paying to keep an account that is supposed to hold your money. Let that sink in. And the interest on your savings? 0.01% annually, roughly nothing. Meanwhile, the bank is taking your deposits and lending them out at 7 to 24%. You are funding their profit and receiving almost nothing in return. You try to get a credit card. The best you qualify for is a secured card, which means you deposit your own money as collateral so the bank can lend it back to you and charge you interest. You are borrowing your own money. This is legal. This is normal. And this is where tens of millions of people are right now. The service is not cruel. It is indifferent. And indifference, when it costs you money every single month, is its own kind of cruelty. Then something shifts. Level 3, you land a steady job, or the one you have starts paying better. Your direct deposit is now $3,200 a month, hitting like clockwork every 2 weeks. The bank does not call to congratulate you, but the algorithm notices. Suddenly, credit card offers start showing up, real ones, with actual limits of $2,000, $3,000, $3,500. The monthly fees disappear because your direct deposit now qualifies you for a waiver. You apply for a small personal loan, $5,000, approved in 48 hours at 11%. For the first time, the bank works the way people always said banks work. You needed something, you applied, you were approved. You are a customer now, not special, not valued, but recognized. The bank wants to keep you because you are generating revenue. Your card spending, your loan interest, your growing balance. You matter to them now, the way a customer matters to a business, which means you matter only as long as you are useful. But here is where it gets interesting. Because from level 3 upward, the game starts tilting in your favor. Slowly, quietly, but it tilts. Level 4. $18,000 in savings. $22,000 in investments. Your credit card gets paid off every single month. So that 24% interest rate? Completely irrelevant. You never carry a balance. You have built this over several ordinary years through ordinary discipline. No lottery win, no viral moment, just consistency. And the bank systems have noticed every single step. Your credit limit climbs without you asking. 4,000 becomes 9,500. Then 14,000. When you buy a car this time, the loan rate is 6.8%, not 11, not 22, 6.8. Not because they like you more as a person. Because your credit score and your asset history have shifted the risk calculation in your favor. This is how wealth compounds inside the banking system before it even becomes large. Better rates mean you pay less for the same things. Paying less means more money stays in your hands. More money in your hands grows faster than less money does. The system begins to tilt, slowly, quietly, but it tilts. If you walked into a branch and said you were thinking about leaving, someone would try to keep you. That is a different experience from the automated indifference of level 2. It is not friendship, but it is the beginning of leverage. Level 5 and beyond is where the rules start to change entirely. At $150,000 in combined assets, the phone line is different, shorter hold times, more senior representatives, people with actual authority to waive fees and solve problems on the spot. At $500,000 to $1 million, wealth management begins. A named advisor, coordinated tax planning, estate guidance, someone who knows your account, emails you directly, and calls to check in. At $5 million and above, the products being offered to you are not even listed on the bank's public website. Mortgage rates that retail customers will never see. Access to private investment deals that require accredited investor status to even hear about. A private banker managing fewer than 20 relationships whose entire career focus is on yours. And at the very top, the rules do not break. Banks do not break laws for wealthy clients. But every legal degree of flexibility inside their policy gets exercised in your favor. Fees that technically apply? Waived without being asked? Approvals that normally take 2 weeks? Handled internally in 48 hours. The system that was cold and automated at level 1 is now human, attentive, and oriented toward yes. Here is the thing nobody wants to say out loud. The banking system is not one system. It is 8 different systems wearing the same logo, and the version you experience depends entirely on one thing: how much money you have, which means the path forward is not about hating the system. It is about understanding it deeply enough to move through it. Every level you climb changes the cost of borrowing, the quality of access, and the speed of everything. That is not motivation. That is math. So here is the question you need to sit with. Which level are you on right now, and what is the one move this month that starts the climb to the next one? Because nobody moves up by accident. But the people who understand the system, they move up on purpose. And now you understand it.